Hi everyone, welcome back. Today we've got two EV stocks under $10 with huge potential, Polestar and NIO. I happen to think that these are the two best opportunities in the market right now, and that is mostly for electric vehicles. I've got multiple reasons why I think Polestar and NIO are extremely undervalued and why they will be at least two of the best companies to own in the near future. Now, before we continue, let me just say this video is not financial advice. It is strictly for entertainment purposes only. But I intend to go through some of the reasons that I have to be positive about Polestar and NIO. And I'll go through some of the reasons why I think these companies are undervalued. But they're golden opportunities. In fact, these are two of the best opportunities in the EV space right now. So if you look at the entire market within the last 10-15 years, it's clear that the EV market has definitely changed. You can look online and just notice that fan enthusiasm about EV companies is increasingly high right now. There's not just a following in terms of companies, but there is more than just enthusiasm. It is a true form of support when you look online and you see people supporting their given companies. This has helped to change the face of what it means to be a brand, because now Tesla doesn't have to advertise. They have their fans who advertise for them every day for free. However, ironically, Tesla will try out advertising because the market is becoming highly diversified. BMW, Mercedes, they're all bringing out new electric vehicles that are competing with Tesla, and this is good. And Tesla recognizes this challenge and they aim to advertise. The good thing is that Tesla has like 20 billion. They're not short on cash at all, and that's no surprise. But we're starting with Polestar today. Polestar, Swedish electric vehicle producer. We know they're a premium brand, of course. That's where they're focused on. That's their niche. Premium branding. So they went public last year through a SPAC merger with Guggenheim. However, since then, Polestar shares have fallen at a dramatic rate, over 75% in fact. I happen to believe that the Polestar stock has one of the biggest potential on the EV market to recover sooner than most people believe. Now, the current price per share is $3.30, and its market cap is $7 billion for this company, who delivered 51,000 plus vehicles last year. They're looking to deliver anywhere from 60 to 70,000 vehicles this year. So can buyers make their money back from Polestar in 10 years if they acquired shares now? Can they make that money back? Or even more importantly, if a company were to buy Polestar for $7 billion, could they make that money back within 10 years? That's how you ultimately determine the true value of a company. If you're looking at any company, you say to yourself, well, I'm paying for this company. I'm paying, let's say, $100 billion. Can I make that money back in 10 years? If I can't, it's probably not a good buy. Now, with Polestar, on the other hand, the good thing is that it's extremely undervalued. Last year, they earned $2.5 billion from delivering 51,000 vehicles. And this year they plan on selling 60 to 70,000. That could result in anywhere from $3 to $3.5 billion. Now for 2024, I predict that Polestar will manufacture over 100,000 vehicles, thus increasing revenue up to $4 or $5 billion. If my estimates are correct, Polestar yearly generated revenue could exceed anywhere from $7 to $9 billion in the next 2 years alone, this year and next year. And let me explain this to you. This is without all of the cars on the market. The only car they have on the market at the moment is one. Imagine what's going to happen with this company when they have the Polestar 3 selling on a regular basis, when they have the Polestar 4 selling at a regular time. What happens when they introduce the Polestar 5 and the Polestar 6 in the next 3 to 4 years? A lot more revenue. That's what I can say. But for the next 2 years, Polestar can earn enough money in revenue that can completely eclipse their current market cap. Yes, I think they are drastically undervalued. If they can earn that money back in the space of 2 years, that's all you need to know. Now, keep in mind, that's revenue. It's not profit, it's revenue. There's a difference. It would be great if that was profit. As you can see, as we can all see based on Q1 results and their financial, Polestar is not a profitable company yet. And I think that's a good thing. I don't want them to be profitable right now. I need them to manufacture as much as possible. I need them to have the infrastructure to build 250,000 vehicles yearly. That's when I expect revenue. That is when I will expect profit from Polestar, when they can produce 200,000+ vehicles a yearly basis. I'm not expecting profit right now. They're still building out their infrastructure. They're still working on new vehicles. They've only got one vehicle on the market right now. I'm not expecting much. We shouldn't expect that much from Polestar. But the pressure is on, and I'm glad that they're not making that much money yet, because it leaves pressure. Pressure is good. Pressure helps them to do better in the future, and that's what I need for this company. So there you have it. You can take a look for yourself. The Polestar Automotive Holding currently $3.34. Additionally, keep in mind that revenues were up. Revenues were up this year, and I believe that is in Q1. They sold over 12,000 vehicles in Q1, and that's a 26% increase. So my point is that I'm quite confident in Polestar. I'm not losing confidence anytime soon. But if you'd like to learn more, check out this article. It's on our website. It's very informative and very educational. Now let's move on to NIO. NIO is an interesting one because Cathie Wood opted to part ways with Chinese EV company NIO. ARK Investment Management sold a total of 336,000 shares of stock during this period. Since then, the stock has dropped by 45%, which could explain why Wood was no longer interested in the holding. Yet, she remained highly optimistic about Tesla. We're all highly optimistic about Tesla, but also recognize NIO that they have a massive potential in the global market. Now, Cathie Wood has given up on NIO for now, but does that mean that the entire market should give up on NIO? I doubt that. Cathie Wood recently gave up on Nvidia, and this was unfortunate timing for Cathie Wood investment firm. After their departure, the Nvidia stocks skyrocket by a whopping 25% plus. This is prior to Cathie Wood investment firm selling their shares. What a terrible timing. They could have made a sweet piece of change if they just held their position for a little bit longer. I honestly don't understand why they sold. Nvidia revenue has been consistently growing year over year, and it's not slowing down anytime soon. This is a great company to be invested in. NIO's deliveries were up 22% for the first 4 months of 2023 compared to the previous year. However, this wasn't enough for them to gain traction in an extremely competitive EV market. Not just extremely competitive, but the EV market is even more competitive in China, more than Europe, more than America. In China, there's a lot of different EV companies, including Tesla. Tesla is there. But keep in mind, NIO has a remarkable momentum, with deliveries expanding yearly from 11,000 in 2018 to 122,000 vehicles sold last year alone. Their annual revenue also saw an impressive compound annual growth rate of 74% over the same time span. So we know that NIO can benefit from a few different things. It's established itself as a leading player in the Chinese EV market, that's for sure, giving customers confidence with its battery subscription model and providing an extensive system of charging and interchangeable battery stations throughout China. And they're starting to install these stations in Europe, charging stations and battery swap stations. NIO is doing something that no one else seems to be doing, and it's kind of going under the radar. Now, this is a look at the NIO share right now, $7.70. Hasn't been doing the best recently, but I believe this is a great time because it's extremely undervalued. Now, we know NIO vehicles are extremely premium. They're premium manufacturer, and that is good because a lot of people actually find the NIO vehicles to be far more interesting than the Tesla vehicles. By the way, NIO also has a far more diverse portfolio of vehicles to sell. NIO is actually launching the ET5 sedan in the UK. That will be their cheapest model. I cannot wait to see this vehicle in the UK. I'm looking forward to it. That will increase my confidence in the company by a lot. Seriously, just by having these vehicles in the UK. And I'm extremely happy to see that NIO is branching out into Europe boldly, and they're not slowing down at any expense. That's what I like to see. I want to see factories being developed in the UK. I'd like to see factories of NIO being developed in Europe. That's the long-term plan. And I'd like to see factories being developed in the United States. That's the long-term plan. because ultimately it will be a struggle to build all the vehicles in China and ship them to European countries. That's what Polestar is doing right now, and it's proven to be challenging because, let's be honest, having a factory in a given country closer to your customer base is the best thing. Polestar best customer base is the European market. So they need a factory here desperately, and they know it. The CEO has actually hinted that Polestar could potentially build a factory in Europe. It's needed. It's essential. For NIO, it's the same thing. If their vehicles continue to be more popular within the European market, they desperately need a factory in Europe. The problem is it takes billions to build a factory, especially to build a factory at scale that Tesla is working with. But I'm surprised that more investors aren't doing the same thing that they did for Tesla. But for Tesla to accomplish what they did, it took a long time. And basically, almost everyone in the media was against Tesla a little bit longer than 5 years ago. Okay, we're talking 2015, 2014, 2013, 2012. People were against Tesla. They really were, especially the media. And it's a similar thing with newer EV companies. However, the market is clearly seeing that EV is the future, so they're a little bit more optimistic. But I remember a time when it felt like no one in the media believed in Tesla. And that's a similar sentiment to what we're getting with NIO and with Polestar. Thankfully, Polestar do have the support of Volvo and Geely. I happen to trust Volvo. I like Volvo. They've been reliable. They have been trustworthy for decades. They've made some of the best and safest cars for decades. Trust me, Polestar is in good hands. I'm confident in that. They have this brand identity that is unlike no other. And that's what I like about Volvo. That's what I like about Polestar as well. Polestar is not planning to sell the most vehicles. They're not. NIO, on the other hand, wants to be the next Tesla. Polestar wants to be the next Porsche or the next Audi. NIO is clearly wanting to be the next Tesla. And the thing about NIO is that I think it's very accomplishable. I think it's extremely accomplishable with the technology they're developing and the rate of their development as well. They have an R&D team that's constantly improving on their vehicles. In fact, NIO recently updated the ES6 SUV. This is an SUV that they've been selling for a few years now, but they've constantly updated it and upgraded it, the chassis and everything. I wrote an entire article about this. Read into it, check out this article. It is very educational if you're interested in NIO. It is surprising to see how they've upgraded this vehicle. This is something that Tesla's not doing, by the way. I don't think Tesla has a specific R&D team. And I don't think they have a marketing team, just like how they don't have a PR team. And that's to cut costs, despite the fact that they don't need to cut costs, especially right now. But Tesla is not looking at their vehicles and being like, we need to continue to develop these vehicles. No, they're looking at it like we've built the best vehicle and it's going to stay that way for the next 5 years. However, NIO is on a different sentiment. NIO is thinking to themselves, we've built a great EV. However, we can constantly develop it and improve it within the next 5 to 10 years. And that's a similar thing to what Polestar is also doing. Polestar has an R&D team. NIO has an R&D team. Now, this is not an R&D team to build new vehicles. Tesla has a team to build new vehicles. They don't have a team who focus on developing the older vehicles. That's what they lack. But I do think that they need it. Long term, they will introduce that. But that is it for this video. Thank you for watching. Subscribe to see more. Leave a like, leave a comment, and of course, I'll see you in our next video.